Long awaited video, guys. We're going to talk about mastering the book map for precise day trades. And again, have you ever looked at one of these book map charts and thought, like, what are these bubbles? Like, what are these weird planets, dude? What are these colors? This looks like a psychedelic trip. And why is the order book even here? What's it doing there? So, after this video, you're going to understand the following. Why is and what is the book map, my bread and butter? How to use the levels of liquidity, how to acknowledge and how to use the buyer and seller bubbles, how to use real market structure, right? We're not talking about wicks, we're not talking about time frames, we're talking about real proper structure. And then also how to take high probability trades. And my favorite part is how to use the book map orders to scale in and out of trades. So the book map, what is this thing, right? Everybody's talking about it. Nobody knows how to use it. What is this, right? Again, the book map essentially is a visual version of the order book, and it's displayed kind of with a heat map, but then also with some bigger bubbles, and you can add some tools. And again, by using the book map, you're going to be able to gain an edge over traders who rely on only price action. You can see where large traders are positioning themselves. So most important thing, right? These red hot levels, that's the liquidity. And then red bubble sellers, green bubbles buyers. We're going to talk about that in a bit. And then also you can spot hidden liquidity levels that influence price movement. So how key levels work and how does liquidity work? One of the first things you're going to notice on Bookmap is the heat map, which is this area over here, right? The colored area. Now, the red and yellow zones, they represent a heavy amount of orders. Closer to the burning red, the more orders in that area. And then the blue and the dark zones, they represent zones with low liquidity, and price can run through these areas. So what you want to do is you want to find the red hot zones. Again, let's take this for an example. And you want to see, hey, the structure makes sense. Well, now, again, we're going to talk about it soon. But you want to find these zones because price is very likely to target all these areas, right? Again, you can see it over here, red hot zone gets targeted. And then whatever is dark or doesn't have any orders, you can expect price to move quickly through there. So if you take a red zone and then you have a lot of dark area, expect some quick price movement. So don't be hesitating on your entries and don't be surprised if price just starts moving quick through those areas. How I personally trade this is I wait for price to reach a key level, and once we reach it, based on the reaction, I take a trade if we have some space, usually between 40 to 50 points to move around. I'm going to talk about that in a second and show a live trade example, not hindsight charts, whatever these guys are using nowadays. So, the buyer and the seller bubbles. It's these execution bubbles you can see on the chart, and they represent market participants. So large green bubbles, it means that there's buyers, right? There's a lot of people buying at the market. And then the large red bubbles means there's a lot of sellers in the market, right? Now, watching the size and positioning of these bubbles will give you insight into whether buyer or sellers are in control of the market. Why? When you see these buy bubbles, right? When you see these green bubbles, if you start seeing heavy aggressive green bubbles and you have a key level above you, that's going to tell you that price is really going to burst into that green key, into that red key level, right? However, if you're seeing the sellers, right, and if you see big sellers, but the key level is above, that key level might not hit. So that's why it's important to have the structure. And again, vice versa, right? Let's say you have a massive key level under price, and then you start seeing really big red bubbles, but price is not being too aggressive. Odds are price is gonna burst suddenly into that level. So you gotta be loaded up because all it takes is really 3 to 4 seconds for price to burst. Now, my favorite, and this is using an example of a trade I took live on stream. We hit those. But again, using Bookmap, you can see the true highs and lows on price, right? You can easily see the strong and the big lows, and you can see the new highs and the strong highs. By using the real structure, you stop worrying about time frames, wicks, or bodies, right? So again, on the candlestick chart, depending on what you see here, you can be like, oh, this is the high I'm looking to break. No, this is a high. No, this is a high. No, this is a high, right? And you're like, but wait, but what time frame? The 3 minute, the 1 minute. Like, you do not need to be worrying about those things if you see the true structure, right? Because over here, okay, well, what's a high? Okay, I see this coming lower. Well, we had this point up to here, and then it breaks, and we have this point, and then what's a low, right? Where do I put my stop loss? A lot of people will be like, no, but this is the wick. No, but this, whatever. No, but maybe here. No. Look, this is a low. Okay, and then this is the other low once it breaks through the high, right? So using the structure in Bookmap will really allow you to see where the buyers and sellers are at. Because again, maybe you see a wick around here and whatnot, but it's like, okay, dude, whatever. Maybe we have a wick here, but it goes further and goes higher. So it gives you that update on structure, right? So again, look at the lows. Boom, it takes out this high right here. This is the new low, right? This area down here, it breaks the high, comes lower as soon as it takes this high. Boom, this is a new low. You got it to the tick, right? Over here. So that just makes it really easy. Now, let's put it all together, and how are we going to find trades? Now that you understand liquidity, bubbles, structure, let's put it all together. First, you're going to identify the major liquidity zones, right? Before anything, you're going to find your red hot key levels, whether they're above or below. I personally like to look 150 points above and then 150 points below, and just mark out my key levels throughout those areas. Number two, you're going to watch for larger bubbles confirming aggressive buyers or sellers. You do not want to be taking a buy if the market buyers are not being aggressive, and you don't want to be taking a sell if the market sellers are not being aggressive. Then you want to use price structure to confirm the trend and align with key levels, right? Why? Because if you're bearish and you're consistently creating new lows, then it makes no sense to take a buy, because odds are price will continue creating new lows. And vice versa, right? If you want to go bullish, make sure that price has recently created a high or price just created a high so you can actually go for that. Now, what I do is I enter the trades based on the context that structure creates and how it lines up with key level. And then let's get to the best part, which is what we're about to talk about. And then I manage trades by scaling in or adjusting my stops based on new liquidity formations, right? This is the secret behind profitability in Bookmap, in my opinion. Because the biggest advantages of Bookmap is that you can scale into positions strategically by watching how real-time liquidity changes, right? If price is holding strong above liquidity, I will consider adding to my position. And again, if I'm in a buy, and then if I'm in a sell and price is strong and hold under liquidity, I will consider adding there. But then if large opposing liquidity appears and price has a negative reaction to it, right? Let's say that out of nowhere this level popped up and then it drives price down, I might consider taking a partial or tightening my stops, right? This is a trade I took. As you guys can see, I took my entry right around here, the green line, stop loss here, and then take profit here. What do I see? Well, I know that my take profit is over at 630. However, I have 605, which is red hot liquidity, right? 607. So I know that, hey, if we break above here, not only are we confirming the bullish structure, but we're also breaking this high. And guess what happens? We break above this level and we start holding, right? So what I ended up doing is I added to the trade. Again, you're going to be able to see how in this position, I added at the top of this wick, right? We added just right around here. One more contract once price broke this high. Why? Because we understand structure, but we also understand that, hey, not only did we break the high and we're holding above the key level, but we have all these targets, right, at 620 and at 650 to the upside. So, hey, I already got a good entry, but I could even add another entry here, right, to give me another 50 points. I don't like adding in drawdown or DCAing because it's going to increase your original loss. It's something I did before, and after gathering data, I realized it made no sense from a numbers perspective. However, adding in profit did, because once I'm adding in profit, my trade is more likely to play out because we have more structure and more liquidity. What happens? I add over here at my key level, right? We burst, cool, good stuff. And then guess what? We take it, we hold, and then we see all the aggressive buyers pushing price to the key level, which ended up hitting full take profit, giving us an amazing trade, guys. So that's how I use it, right? I wait, if I have multiple key levels, I wait for key level 1. And again, when most traders are trying to subtract from their position or partial out, I'm adding to mine. And then, of course, after that, maybe I partial out, maybe I subtract, but I want to make sure that right off the bat, once the position and the trade is confirmed to be into profit and to be the right idea, I want to add to it. I want to give it rocket fuel. I want to give it ethanol. I want to make sure it's powerful. And then once it starts slowing down and once we start seeing other stuff, that's when I start subtracting and kind of calming the horses down. Now, just to answer some of the questions that you guys had in the previous Bookmap video, Ty Blue asked, what Bookmap subscription do you recommend? I would recommend the 3-month one with the global, just because it gives you a 50% discount and it gives you full access to all the tools you need on Bookmap. And then Papa G, again, shout out you for commenting on all videos. Do you think that recognizable patterns in the market don't repeat themselves? They do. However, I don't think it's about the pattern, right? You have all these head and shoulders, bullish engulfing, bearish, knees and toes, whatever, right? I think it's more about how the pattern happens, right? Because again, you can have a pattern, but then if it happens slowly at the wrong time of day without a liquidity reaction, it might not be as strong if it happens at the right time of day, with more speed, with the liquidity reaction. So yes, I think they repeat themselves, but it's not about trading patterns that repeat themselves. It's about finding if it's repeating itself in a way that's actually going to be profitable in the long term, right? So more about the pattern and less about the pattern itself and more about how the pattern plays out. I think that's important. And again, guys, hopefully you now have a better understanding of how to use a bookmap in your day trading. It is such a powerful tool that most traders overlook. But once you start using it correctly, you're never going to want to go to only candlestick charts. And again, guys, subscribe for more valuable trading videos that are coming up if you like this one. And now I'm going to be working with a couple more traders one-on-one, scaling you guys to 20K a month within 6 months. And if you don't get there, I continue working with you for free. So click the link in the description if you think that could be a good fit for you and if you want to scale your trading to 20K a month. And see you guys in the next video. Appreciate you guys. Take care. Bye.